What's up, guys? Welcome back to Everyday Money. If you guys are out there and you're looking for a house, or you're looking for a piece of investment property, or any type of residential real estate or whatever, you guys know that right now that the prices are going insane. All throughout 2020, 2021, prices have been going crazy for pretty much every different type of real estate. I mean, as a matter of fact, when we look at the median home price from the bottom of this the market in 2008, homes were only $208,000. And the latest data that we have on Q3 2021, the median home price is $404,700. So that's putting a crimp on people about what they can afford and just how much they can buy. And the low interest rates and the supply and demand has really been running this up. And we'll get into that in a minute. But it's really been running up the cost of homes and the cost of housing and buying investment properties. And it's even been running up the cost of rent. I think it's even higher than how fast that housing is going up. And so the question on everyone's mind, and the things that people are just saying, is that they are saying they're either going to wait for the housing market to crash, or they're asking, when is the housing market going to crash? And the reason that a lot of people are doing this is because they lived through the 2008 housing bubble, the mortgage bubble, the financial crisis. And that's important to remember, that it was a financial crisis, not necessarily so much of a housing crisis. One caused the other. And the thing that caused the housing crisis wasn't the price of homes whatsoever. It was the loans that were made to people that were not able to pay them back, and that caused a domino effect in the financial system that caused other things in the financial system to break down, caused people to lose their jobs, caused people to default on their mortgages, and that is why the housing market fell. Now, in that time, into the 2008 housing market bubble bust, the stock market did go down by like 50%. It was a major news item. Of course, lots of people lost their jobs, but the housing market only went down by about 20%. It wasn't this massive disaster that a lot of people thought that it was. But the thing that was bad was that all the stocks were going down, people were losing their jobs, and so that was what was really causing the problem in the housing market. The financial crisis caused the housing market crisis, and that is what happened. The thing is that people got it in their heads that this is going to happen on a regular basis, that the housing market is going to crash in a significant fashion, probably because a lot of the folks looking to buy houses right now are in the millennial generation, and so that had a very big impact on how they view housing, how they view purchasing a home, is that there will be this massive crash. That doesn't necessarily mean that that's going to happen in the future. It doesn't mean it's going to happen anytime soon, and that is why they call it a once-in-a-lifetime type of crash. If you look at the median sales price of homes sold in the United States, and that's a graph published by the St. Louis Fed. I'll put it up here on your screen if you've never seen it, but the St. Louis Fed has a lot of great information on housing prices, the supply of houses on the market. They look at pretty much everything financially related in the United States. You can look at the M1 money chart if you want to see how much money has been printed in the last 12 months. It might astound you. But for homes, the median home price has been up until the last few years almost on a linear fashion. And when you look at this, if you weren't pointed out exactly where the housing crisis was, because they shade the recession areas, it may be a little harder to find than you would think, because it is not this straight down line of a crash. It took from Q1 of 2007 to Q1 of 2009 for housing to completely bottom, and from there it's pretty much been a solidly upwards trajectory. And over time, this housing crisis is going to flatten out, and it's going to look something similar to this little blip we had back here in Q2 1990 to Q3 1990, or the housing market after 9/11, after all that stuff that went down. So what is going to cause the housing market to either level out or go up or go down? Which, by the way, nobody is going to be able to tell you 100% if the housing market is going to go up, down, sideways, crash, roar, whatever. Everything is going to be just a guess, because I guarantee you that no one was able to predict how bad the 2007 and 2009 crisis was going to go, or the recovery after that. People said that it's going to continue to go down, it's never going to go back up, and we are almost double the home price value of 2009 in the trough of that crisis. But the way that you can look at what is going to happen in the future is you can go over here to the St. Louis Fed monthly supply of houses in the United States to get a look at what the supply and demand is, because as the supply of homes goes down, that would mean that there's less on the market to buy. And if the demand is high, which demand is still extremely high right now because people have money, interest rates are low, people want to have houses for, millennials have kind of held off on buying houses for the most part. So right now they're starting to get, the millennials are starting to get into their late 30s, early 40s, and they're having families and they're going to want to purchase houses, and I think they're just tired of renting. From everything that I see on Facebook, when you get into CNBC comments, everyone's tired of renting, so the demand for homes right now is extremely high. And now on this chart, you can see that down in September of 2020, the supply of houses got down to a record low of 3.5 months of supply on the market. Now, after that, we have actually come back up in a significant fashion. We are up here right now at about 6.5 months of sales supply on the market, and that is pretty much in line with the median that the supply has been since 1963. And so you can look at that as, we're kind of getting back to a normal supply. So as long as demand remains high, supply remains normal, the price of housing will likely go back up. If the supply of housing would sink back down, the price of housing would continue to go up even more, as we saw it do during 2020 and 2021. Now, if the supply of houses goes way up and demand remains the same, then the price of housing will probably come down a little bit. As we've seen here in these shaded areas that are recessions, in 1980 we got up to 11.6, in 1981 11.3, in 2009 we got up here to, I can't get the cursor to go on it, but 12.2 months of supply of houses on the market, and with a very low demand for housing, that caused housing prices to crash down. So when you look at these charts, you look at the supply that's out there, you look at the demand that is out there, and a lot of this is going to be affected by if people continue to have good employment, if income continues to go up, if the economy remains strong, which the sentiment right now is that it is not a strong economy and that we are getting a weaker economy. But if the economy can be strong and people at least think that it's strong, then they will continue to have the demand for housing. Now, the Fed has said that they are going to start ratcheting up interest rates, and that will indirectly cause the mortgage rate to go up, and that will put a little bit of a damper on supply or on demand. So that could cause housing prices to come down a little. But even those rates are still probably going to be at historic lows. Right now you can get a mortgage, a 30-year mortgage for around 3. Even if we go back up to 3.5%, 4%, 4.5%, those are still historically low interest rates, and I think the demand for housing will still remain strong. In my opinion, what's going to happen with these insane growth rates, you can't sustain this for too terribly long. As things get built faster and faster, as builders catch up with the supply issue, and then demand kind of levels off with people being housed by buying the supply, or interest rates or something else putting pressure. I think that we are going to end up with a leveling off of home prices, or getting back to that 3 to 4% appreciation rate every single year, instead of 5, 10, 15% that we've seen over the last year or two. I do not think that there is a crash anytime in the near future. Now, granted, everyone in 2007 probably said the same thing, But I think that the fundamentals with the lending standards, with what they are making you do to get a mortgage for a home, not having these crazy adjustable rate interest only loans that require no documentation, no income verification, anything like that, that is pretty much a thing of the past. I do not see a housing crash coming for us anytime soon. But these are the tools that you guys can use. The information is out there between National Association of Realtors usually post statistics, and these St. Louis Fed charts can really show you where the market is going, how much is on the how much supply is on the market, what the home prices are going for in a median fashion around the country, and you can make a decision based on that where you think home prices are going to go. Now, there will always be outliers. There'll be places that are doing much worse. There will be places that are doing much better. And I think that the places that have always historically done well are always going to historically do well. Coastal areas, vacation areas, the big cities, New York, San Francisco, things like that, desirable places to live are going to continue to go up faster than the market, and there will be other places that don't do as well. But the majority of the country, I think, will be on that even keel that has been on for essentially most of history. So guys, if you like this video, if you got something out of it, give me a big thumbs up. That really helps me out in the YouTube algorithm. If you haven't subscribed yet, subscribe down below. Hit the notification bell as well so you don't miss anything that I put out on personal finance. I appreciate you guys watching today, and I'll see you in the next one.